why you don't want a big tax refund. What's up, everyone? It's Rich from Budgets Brews, and today is Freaky Fast Finance Friday. Let's speed right in. Okay, it's tax season, which means you're probably itching to go ahead and file your taxes, get that big refund, and go spend it. Money, money, y'all. Ching, bling, ching, or something like that. Now, according to the IRS, the average tax refund check is about $2,500. What can we do with that money? Well, there's a couple things we can do. We can pay down our debt, we could pay some bills, we can fund our retirement, and we could go on a vacation, but how about neither? Let me explain. So you don't want the IRS holding your money, using it as an interest-free loan. Think about that. If you're getting the average check is around $2,500, that's money that you gave the government to go ahead and put in a CD or an investment or a savings account, and they were able to earn interest on that money throughout the whole entire year. And then at the end of the year, they said, here you go. Thank you for letting me borrow that money. That's why you don't want to do that. So what can we do about it? Let me show you. Okay, so the first thing that we want to do is we want to get a hold of someone in our human resource department, our payroll department, and we want to say, hey, can you adjust my withholdings? And you want to adjust those by $200, $100 per paycheck, or whatever it is that fits your situation. I'm going to actually link in the description a withholding calculator so you could actually plug those numbers in to see what you need to withhold from your paychecks to get you right at zero. We want to get as close as we can to zero as we possibly can. Then what we're going to do is we are going to set up an automatic transfer from our checking account where our paycheck is going to an additional savings account, whether that was the $100 or the $200 that you used to withhold. That way, because that money's going to be put back in your paycheck, as soon as it hits your account, boom, it gets transferred to a sub savings account. Now you are earning interest in that money and not the stinky old government. Bonus, it also helps prevent tax identity theft. Think about it. What criminal wants to use your information if you're not getting a refund check? They don't want $0. And when we do put the money in that savings account, we're going to use a high yield savings account, something that's going to earn us 1-2% interest. Now, you might not be thinking, well, that's so much money I'm going to be earning, but you could be wrong. $200 a month over the course of 30 years, earning, we'll say 2% interest, is $97,000. And of that, the interest is $25,000, what you just earned. Now, I will say one thing. If you don't want to take my advice, I can understand if you are using more of a behavioral approach. If you're somebody who can't save, if you're somebody who doesn't want to go through the automatic transferring of from your checking to another sub savings account, if you think you're just going to spend that money, you might be able to win me over on this. If it helps you save in the end, when they cut you the check, it's $2,500, and then you could save it, or then you can do what you want if you want to pay down your bills. Fine, you got me there. But I at least wanted to tell you this in case you're somebody who can withstand that urge and you can put that away. You'll eventually make more money down the road in the long run. And just like that, we hit the finish line. If you found this episode beneficial, give it a share. Go ahead and tell your friends about it. Budgetsandbrews.com. If you go there, we have all of our podcasts, all of our YouTube videos. You can subscribe to our newsletter that we send out once a month that recaps the following month. Also, we have our beer reviews there and our merchandise store. Go ahead and smash that like button. Leave a comment. The comment section is crazy down there. And subscribe. That does it. See ya.